The best ETF stocks. How to win at the stock market. Hello viewers, and my name is Antoaneta, and I'm happy to welcome you to yet another edition of my videos where I will be discussing a strategy for winning in the stock market. I will also be talking about 4 potential stocks you can buy in 2020 that will yield profits for the long run. The stock market is not in the best position right now, despite the recent positive turn of events. There has been a massive economic downturn in recent times, owing to the outbreak of the pandemic. The stock market is volatile. Unemployment rates have spiked like never before. Businesses are being shut down, economies are suffering. However, it is still possible to win in the stock market. This strategy I will be discussing is going to work for over 90% of the investors who use it. And it's way better than hiring a financial advisor, day trading, or picking the companies you might like. So, do you have a certain amount of money and are thinking, how will I make this money yield more money, to make more money? Or what do I do to avoid any losses in stock market if I invest this there? Well, not to worry, because this video has made especially for you. If you learn anything in this video, please like and share this video with your friends and family. Also subscribe to my channel and tell us what you learn in the comments below. So, without much ado, let us dive straight into the business of the day. What is this strategy? Some of you must have heard of, but the strategy is called the index fund strategy. SP 500. Historical annual returns over these decades have returned more positive results than negative. This means that on average, the SP indexes have gone up yearly. I would be quick to point out that the past success to not always guarantee future ones, but these recent successes can serve as indicators to investors as to where they want to put their money. And to be honest, I use these past successes as indicators of the future places I want to put my money. You can picture index funds as a tracker that tracks the performance of a particular market index. So you remember, for example, if an investor wants to buy shares in 500 of the USA's top companies, how would he or she do it? It may sound impossible due to the number of companies mentioned, the cost of a share from each of the companies, and how the investor will be able to keep track of each of these companies. Is that even possible? 500 companies? This is where index funds come in. Index funding helps the investors to buy one or more shares of this index fund, and it will purchase shares of each of these 500 companies. See it this way: you are investing in the index funds, and the index funds are investing in these companies. It is also the principle on which ETFs work. Warren Buffett, who some refer to as one of the smartest investors alive, recognize index funds as one of the smartest ways to invest in the stock market. Index funds are gaining more popularity than actively managed funds, even though it has been around for many years. Remember, index funds are much more popular now than the managed funds. Index funds also do not require any level of expertise. So, if you are not skilled in following the market activities closely, it would be better to invest in the market as a whole through index funding. Even professionals have a hard time beating the market, so they invest in index funds themselves as well. So, yes, it is much easier to invest in index funds. Also, you do not lose any money on a high fees. Employing the services of financial advisor or investor may cost you more, so you get to save that cost with index funding. The average expense ratio of index funds is 0.08%, which is absolutely excellent. Now, let me talk about 4 top ETF stocks you can buy today. The values we are discussing here may have a negative return due to the pandemic, but since we are investing in the long run, there is no need to fear. And just let me remind you, today is 17th of June and this is when I'm recording the video. So anything can change after that. Number 1, SPDF, SP500 ETF, SPY. It is one of the most traded ETFs on the market. It was formed in 1993 as the first publicly funded ETF in the United States. Its current trade rate is $312.96 per share, with a dividend rate of 1.90%, and its yield return is minus 8.58%. Its 52-week high is $339 and its 52-week low is $280. Its 10-year return is 11.59%, and the annual total return history shows that it has more greens than reds. Their top 10 holdings include Apple, Facebook, Microsoft, Amazon, and other companies. Their expense ratio is 0.09%. Investors like this fund because it is the most traded and tracks the index funds in the real time. SPY stocks is the oldest and the largest ETF, largely because it was the first to track the SP 500. If you buy SPY stocks, you own all the stocks in the SP 500. This is really good. Number 2, Vanguard SP 500 ETF, VOO. It was started in 2010. Its current rate is $297.72 per share, with a dividend rate of 1.89%, and its yield return is 8.7%. Its 52-week high is $311.59, and its 52 weeks low $200.55. Its 5-year return is 9.08%, and looking at the annual total return history shows that it has more green than reds. Its portfolio of 99% 30 was in stocks. The top 10 holdings are similar to SPY. The expense ratio is 0.03%. It's more long-term and attractive. Buffett has recommended this fund as well. Number 3, Schwab US Dividend ETF, SCHD. It favors holding stocks and receiving dividends instead of relying on growth and selling new stocks. It tracks Dow Jones US Dividend 100% index. Its current rate is $53.60 per share, with a dividend rate of 3.35%, and its 52 weeks high is $59.56 and a 52-week low is $38.83. Its 5-year return is 80.23%, and the annual total return history shows that it has more greens than reds. Its portfolio of 99.96 was in stocks. The top holdings include ExxonMobil and Coca-Cola and more. Their expense ratio is 0.06%. Is this a good buy? Yes, it's a dividend-focused ETF with a portfolio of defensive, high-quality stocks that should fare better than the average stocks against the coronavirus. And by the way, the ETF currently and the annual distribution has grown every year since the fund's inception in late 2011. Number 4, Vanguard Total Stock Market ETF, VTI. It invests in small, mid and large cap companies. Many of the companies here are not in the SP 500. Its current rate is $158.61 per share, with a dividend rate of 1.79%. Its 52 weeks high is 172 and its 52 week low is $109.49. Its 10-year return is 11.28% and the annual total return history shows has more green than red. And it's 99.96% was in stocks. The Vanguard Total Stock Market ETF is a solid choice for investors who don't want to think about picking stocks or sectors, although it would be hard to argue that it's materially better than SP 500 index fund. It does offer broader exposure to the market. Since buying one share of an ETF fund gives you interest in many companies, I can say it is a form of diversified investment and it's safer than investing in individual companies. I'm not saying you should only invest in ETF or not, it is your choice. By the way, you need to make your own choice because firstly, I'm not a financial advisor and this is only my research and my opinion. I got a mixture of both. But what I can say, start investing. For more investment tips, please see my previous videos. I've got quite a few different topics. If you enjoyed this video and you'd like to watch more about the subject in the future, please let me know by sharing it with your friends and liking it on social media. And I'd like to hear your opinion. Which of the ETFs do you invest in ETFs? Which ETFs do you invest? I put a lot of time and effort to make these videos, and if you want to see more, or I ask you to subscribe to my channel, as long as my channel grows, I will be able to make more videos and share them with you. There will be plenty of other motivational videos and you can just scroll down and check my channel. I made quite a few videos how to invest. I made video how to run a business, how to get more motivation if you actually are not so motivated person. So if you haven't started on the market yet and you don't know how to start, down below this video I've got a few links how you can open a account in trading 212 in eToro as well, free trade in UK and ho.co.uk, and you can actually start your investing now. If you wish to check these links, they're down there below, but I'd like again to remind you, please comment because that's help the YouTube algorithms. And I'd like to say thank you for watching, thanks for being with me till the end. Until next time, stay green and motivated.